All right. Sorry about that, guys. Glad that we are all here. I'm all situated, ready to go. So, first of all, I want to just say last week we had an overwhelming uh amount of interest on what we're doing and how we've been able to either get what we're getting or just questions about the fund and what it looks like. So instead of answering people one by one, which probably I was not going to be able to do, I decided that we're just going to do another Wednesday Zoom to give everybody more clarity and give time for people to answer questions. All right. And for anybody that wasn't here last week, we'll send out the recordings for everyone. And hang on. And I just want to share that this is something that is really, really exciting. I truly believe this is like a unicorn opportunity for not only myself, but for everyone in the community and everyone that's listening right now. And you get to be in on the very front end of this. Um, so today we're going to go over just a little bit more of the structure, give clarity of what it is, exactly what we're doing. Last week I had 20 slides of things, so we had to go through pretty quickly. And I know people were like, "Oh my God, I'm confused about this, about that." So today it's all about creating clarity. I'm gonna go for about 10, maybe 20 minutes or so on just explaining what it is that we're doing and the difference between what's available for what we're creating versus what, you know, typical investments that you see out there. So what I love to do is first I want to give some shout outs to a couple of my partners that are on here right now. So first, let's see who's here. Um, Chris, Kurt, if you guys want to come off mute and just introduce yourselves a little bit. So Chris Craze, Kurt Walker. Let's see.
Hey, everybody, this is Kurt Walker. We are here in Las Vegas, which I still believe is the greatest city in the world to live in. And we are beyond excited to be partnering with you to make some magic happen here from an investment standpoint and from an entrepreneurship standpoint.
Yeah, thanks. And Kurt is a community builder like me. So he's got a huge community on the venture side. And we believe that that is equally as important as what we're going to do on the real estate side is to create opportunities for new ventures and for businesses to thrive and to actually begin and to be birthed here in Vegas. So there's a huge opportunity in there. And Chris, say what's up, Chris.
Hey guys, how you doing? Chris here.
So okay, Chris is great with marketing. He's in the what's it called? Click funnels. He's got what is it? Two decimal. What is it?
Two
What's the
comma
award that you
club.
got? Two comma awards?
We should rename it to Decimal Club.
Two decimal. The two comma clubs. That means he has multiple businesses that did over $1 million just through click funnels. So he's going to be really key and really huge on promoting and marketing what we're going to be doing because I personally believe that on the investor side, this is something that everyone gets to know about and be able to participate in, and for people actually to create your own fund to funds or feeder funds or see it as like it's your business. Okay, so I'm going to just share where we ended off last week, and then I'm gonna pull up my whiteboard and start explaining that way, and then we'll do a Q&A. So if you have questions, let's save it for the end, for when the part Q&A comes. So just write it down or something like that. I probably won't be able to read the chat just because a couple of my right hand people are not here to do the slides and stuff for me. So I'm just gonna share. Oh, and Justin's here. Where's Justin? Justin, okay, is my partner in the, he's the one that's making it really all possible for us. I'm gonna let Justin do a little introduction of himself. Go ahead, brother.
Oh no, I appreciate it. Yeah. Sorry, I'm also driving right now at the same time. But yeah, no, basically coming in, really enjoy working with Alex, hit it off very well with him when we started working on a deal. and we're able to come in. We do some really, creative financing, which is really cool, where we could leverage, international interest rates, when they're coming in at like 4 or 5%. And basically I'm structuring a whole line of credit with Alex and a couple different things, which is, bringing it possible to be getting a lot of these properties, for the funds to come in and, really be able to, spread their wings and buying, where, we don't have to all go into a, competitive market, in the sense where everyone's trying to buy things and who can come in at the most competitive terms. I'm bringing the ability to kind of wipe that off the board. So it's, in everyone's favor here. And basically, wiping off the situation of the capital problem, on the upfront part, which is going to be cool. But yeah, no, definitely able to come in and, leverage money at a great interest rate. And, we're able to take really good advantage of that.
Awesome. That was very modest. So Justin, he is a large, family office, and they've developed relationships for the last 65 years with these international funds and banks. Okay. So the type of stuff that we're getting, and it's our core competency, is something that sets us apart from everyone out there, is made possible by Justin and his connections and their resources and the relationships that they've built.
So my father's been doing this for 65 years now. He actually came here from Cuba when he came to America. He didn't, come from much when he got here. He founded and was one of the head people of Persol Sunglasses. If you've heard of that company, started that up, sold it off 25, 30 years later to Luxottica, which owns Gucci, Prada, Dior, Miu Miu, etc. And that's where we got a lot of capital to start up the fund, and where we've continued to grow from there, and just been able to get into different, avenues. We own over 200 properties, and, we've got some very, very, very high level, partners and relationships that we built in Switzerland, Paris. We're the only fund that's able to actually offer 100% loan to value, 100% loan to construction, in the United States on, a 30, 60-day closing. Clients of ours, range from KB Homes all the way to GL Homes, Toll Brothers. And, it's very unique to kind of see how creative you can make the market, what you're able to do in there. And we just continue getting, more creative and looking on, how to structure different things. So definitely on a large scale, which is awesome, and definitely super excited to do this whole venture and project and everything with Alex. He's definitely a very good person to work with. So, glad I was able to meet him and get involved.
Yeah, thank you. So Justin, what he brings to the table. So if you guys aren't clear what that really means, is the biggest developers and the biggest players out there build because Justin is able to bring the funding for them. Okay, so they make that possible, and they go and build, and then you have BlackRock and these big funds come and buy those assets from those people. Okay, so we are actually tapping into, beyond what BlackRock can tap into, and beyond what these gigantic funds and institutions are purchasing. And we are actually going to purchase and be able to give it to our funds at a drastically reduced amount at cost, basically, than what any of these funds are going to be able to do. So I'll show you guys that in like my picture. I'm going to be drawing it on my whiteboard here in a little bit.
Yeah, and what's interesting about, what he said about that too, like when you think about a KP Homes for an example, they have a line for an example. A line's a line of credit, you can get construction lines, etc. And you go buy a home from KB Homes for an example, and you're, borrowing money, you're going to pay, even though they claim they're buying back your interest rate, it's all BS. They're still inflating it, and at the end of the day, they're pulling it off our fund, which is getting pushed back out into the consumer. So it's basically a whole extra layer of fees, and interest that's being removed out of the picture, which is unique. So it's like we're the factory where it starts, if you want to put it in perspective.
Yeah. And this is not something that anyone, like, none of us can just go and get this and can even tap into this, right? So what the opportunity here is that, Justin didn't at first was like, why are you bringing all these people? And what is this fun to fun things like, right? Because they do it on just single or a couple partners doing monster sized deals, and they're the source of where the money was. So when you're even getting lending from some of the private lenders out there, there might be 2 or 3 layers, okay, of arbitrage between you and where Justin would be, right? So they're the factory, and now we're going to be able to build from the factory and give it directly to our fund. Imagine being a part of, you know, a fund that is capable of getting deals and doing deals that is exclusive only to this fund, and not even, you know, the big funds like BlackRock can touch it. They won't even have access to it. Think about how much money they make and what we're going to be able to do. So I'll share that. You know, maybe I'll just, it's probably better if I kind of just start my whiteboard here, or my blackboard. All right, so that's a little bit of a context just to, so you guys know where we're at. And we have many more partners that are, all of the partners that we're bringing on are game changers by their own, in their own rights. So we have, you know, Justin being the big, bringing the big money and the debt that you can't get anywhere else. And then we have proprietary software that's going to create next level accountability and transparency that is really not seen out there either anywhere. So, all right, let me just begin with my board here. All right, so first, what we were talking about is, everybody see the board? Okay, cool. There is a factory. Okay, there is a main factory where the money comes from, and it gives out to developers to build their building. So let's just say this is a like a $500 million building. This is also a $500 million building. The money comes, this is the source. Okay, this is what we have access to, right? And then you have your developers that build this for 500 million. Actually, this might just be like, you know, a little too, I don't want to get too crazy with the numbers. Let me just write this down. Let's just say it's $100 million building. And this is phase one, okay, of the first transaction that happens from the builder side. Builders, okay, they have to make money, right? They have to charge up and make money. So by the time this building moves down to phase two, which is now you have your BlackRock or whatever big funds out there, we'll need to buy this thing at, I don't know, 130 million plus, right? 130 million plus. That's phase two. This is where, you know, your BlackRock and stuff comes in. Further down is when they make this same building available to syndicators, or hold on one second. Okay, sorry about that. Your syndicators or your, you know, end buyers. This is your end buyers. Syndicators. Okay. Maybe now this is at 150 million. This is typically, if you were going to get into a deal, you would get in somewhere here. That's you. Okay, so that's like basically 3 phases down. Now, what we're offering and what we're going to be able to do is bring people in right here. We will build and we will sell it to our fund, Legends Equity Fund. We'll be capitalizing and buying at the cost. Look at that difference, okay? And it will be exclusive to Legends Fund. This will not go, BlackRock cannot come in and offer to buy it. This will exclusively come only to the Legends Fund. So think about a brand new Class A 500 unit building. You know, where can you buy that at cost? Okay, when you see those beautiful buildings in Brickell, Miami, and anywhere, can you buy those things at cost? And that's what is going to be available, right? So in the beginning, we were like, okay, we can go and do this. But since myself and Kurt and everyone in my space is all community builders, we are looking to bring, how do we bring people in? right? How do we bring people in to be able to participate in this? Because right now, the way that the world operates is there's a small group of people running BlackRock and Vanguard and Fidelity, and they control everything. What if we were able to do something that gives the power back to people? All right. The vision is that we become like the People's Fund. And what that looks like is, okay, here's our Legends Fund. And I'm actually going to redraw this. We have right now, what we're talking about is the Fund 1, which is the Tony Hsieh Legacy Fund. Okay, let's call it that. This is on the real estate side. Hold on. People are trying to join in. 1 second. On the real estate side, we will have many funds. Okay, because this first fund is probably going to be somewhere between $200 million. $200 million, you can get a couple projects done. Then there's going to be fund 2, 3, 4, 5, 6, 100. Okay, we're going to have a ton of real estate funds. What we're also going to have is we will also have a debt fund. One will be real estate, one will be venture. Then we will have, this is what
Acquisitions.
this is what
Business.
Okay, yeah. So acquisition, business, venture. So this is what Kurt calls the triple threat. All right. So this is venture and business acquisitions. Okay. There's going to be also 1, 2, 3, 100 funds like this. Now, what we have right now is our core competency is that we have debt that can't be matched. All right. You can't get this anywhere. All right. Even the top level guys that are going out there building cannot access this debt. So we have the best debt. 2, we have large capital up front already to be able to buy deals. Okay. We already have a fund that will be buying deals up front, which gets us a bigger discount. And I'll show you guys what that looks like here in a second. So what we're offering is all of these funds, instead of having, we have access to all this money anyways. Instead of doing that, this fund might be 500 million. This could be $1 billion, right? We're going to give everyone the opportunity. If you ever heard of a fund of funds, is a fund that invests into a master fund or a master deal or a syndication. So these are called fund of funds. All right. So you guys get to participate here. And you can go here and you can go here. So every fund gets to do that and gets to choose. And what we do is we actually build this. So here we build it for you. Okay. Think about it like a bowling alley, like a bowling lane, right? And the bumpers are up and there's a cage around it. Yeah, who's that?
Sorry, this is Larry Karp. Because I got to run in 4 minutes. Just a quick question, if you don't mind. Assuming the debt fund that includes distressed debt, notes, the distressed notes.
Okay.
Is that correct?
So debt, for example, this is going to be basically a cash play, cash on cash play, because what happens in the debt fund mostly is you have, let's say it's $100 million in the fund. We can leverage this thing up to like 500 million at, I don't know, 5%. And we go out and use the debt that we got to lend. And there's an arbitrage between that.
Yeah.
Right. So there's debt fund on the real estate side and debt funds on acquisition side.
And the source of funds is what? Family offices, hedge funds, sovereign wealth, all the above?
Yeah. Well, so here's the thing. We actually will not take direct investments into these funds of less than like $5 million. So we really will only take it from our fund of funds.
Got it.
And this is the opportunity I want to give to everyone, because the goal is that we have 100,000 of these guys, because they talk to 1,000 investors each. Now we have a large community moving in sync. Because the goal isn't just about making the most money. The goal is about being able to make impact and make a difference. And you do it not with money, you do it with people. So the focus right now is still on, let's just focus on the real estate fund for a second here, just how our core competency, how we're able to do this. Just this itself is literally a unicorn. Okay, the opportunity to be able to participate in this is a unicorn. All right, nobody is going to be doing this. For those of you guys that have been in syndications, multifamilies, been building, doing your things, you know, like the value of what this looks like. Again, this is where most people are looking at deals. Okay, already 2 phases out. BlackRock, big funds are before you. And then before that is the Legends Equity Fund. Okay, because we will do our own builds with our own source of capital. And, you know, it's kind of like I mentioned last week, it's like owning a gas station and owning the entire refinery and the oil itself, and being able to get the best product at cost. It's like as if the manufacturer came out and started selling, and you have direct access to those, and you're the one that's selling. You will immediately be able to be ahead of all the other deals that are out there just by having access to this. All right, so first of all, what you get from being in this community is the fund of funds built out by our legal team. Okay, the other thing is, like, you will go through training. We have training every single week on pitch, capital raise, legal, the vision itself. Like, the more we understand the vision of where we're going and what we have, the better. So there will be constantly different things. And we partnered with, our partners are MW Law, okay, and Proxy Financial. Sorry, my phone. Proxy Financial is going to be doing a lot of financial wellness and fitness for everyone that is involved, all the way up to the investor. So they'll be offering their services there, and they're going to be doing the admin. Okay, this is, sometimes people are like, well, how do I do a fund of fund? How do I get into this game when I don't really know what I'm doing? So this is, we're putting up the what are those things called when you go bowling? The gutter things. What are they called? Somebody?
Bumpers.
The bumpers. We're putting the bumpers.
The bumpers.
And we're putting a cage around it so you can't even throw the ball anywhere else. It's only going to go down and hit a pin. Like, that's the plan, and that's the vision of what we're going to be building. So Proxy's going to take care of all the admin work, K1s, distribution, onboarding, all those things, and they will be advising the fund, your fund itself. All right, and then we have MW Law doing the legal work, so that there is a level of congruency that happens. All right, when you have everybody out there doing a bunch of different things, this is where people get into trouble, and this is where, implosion kind of happens. But when we're all moving together, using the same legal, using the same admin, and we have actually a proprietary software that tracks every single transaction that happens, uses what blockchain is really designed to do, is to track every transaction and everything that happens, and it tracks it forever. So you can't actually take zeros out and put zeros in. Those are all tracked all the way from the main fund, the master fund, up to your fund of funds. All right, the goal is that in the future, or not even that far into the future, that investors, we raise the standards, okay, that investors will say, without using, and I don't know what we're going to call it yet, but I'm thinking in my head, I'm going to call it a trust ledger. Okay. Without the trust ledger, we're not investing into a deal. It's too risky. Okay. Even if it's syndications out there and other deals that you see, if you're not using the trust ledger software where we can see everything is transparent, everything is tracked, then we don't want to invest. Right. So there's a level of accountability that is also going to be for the operators. So a couple things that are our core competencies is one, unmatched. The type of deals that we're going to be doing, the type of debt, unmatched. We're going to be able to buy deals that nobody else can buy. Okay. And we have cash up front. And then we also have, this congruency that happens that is created within our community. And then we also have this proprietary software from Proxy Financial that literally tracks and keeps everything transparent. And so all the way up and down. So investors can have confidence investing in here. The last thing we want to do is to have something that isn't transparent, which is exactly what's going on everywhere right now. All right. Whatever fund you invest into, whatever deal you invest into, the best you get is a newsletter a month and some T12 or some kind of ledger. Right. But if you can actually have every single contract and every single transaction like tracked, then this is next level. Okay. I don't think a lot of funds or corporations or, even the government out there even wants to be doing that. I think corruption is just all over the place and people are super out of integrity everywhere. That's why blockchain hasn't been used for its purposes, but we will implement it because we're about integrity and honesty and transparency. It's all about trust. Okay. It's about taking trust to the next level. So that's what really the fund of funds look like. CJ and Brian, if you guys are here, if you guys want to add anything to what I just shared, these are the two founders of Proxy Financial. They're all in with us on what we're doing because they see it. They see the opportunity here. And I believe Jacqueline's also here now. She is one of our other partners too.
Hi.
Hey.
Did you need me to say something? Sorry, I was trying to get off a call.
I could just do a little introduction of yourself.
Oh, that's nice. My name is Jacqueline Matoza, and I am a retired CPA that worked with like the top 1% and the Fortune 250. So billionaires row basically, and decided in 2021 I didn't want to be part of the problem anymore and killing our middle class and squashing everything, and I wanted to be part of the solution. So I joined Proxy Financial and I launched my 360 Real Estate University last month with Alex. And I'm basically here to help teach people and make as many millionaires as possible. That's my goal.
Awesome. Yeah. And Brian's here as well from Proxy. Brian, what's up, man?
How's it going, Alex?
Good.
Hello,
good,
everybody.
sir.
Good evening. Super excited to be here. Like Alex mentioned, these are game changer technologies. These are game changer visions. CJ, the founder of Proxy and master geek, has been geeking out with Alex for days on end. We have to go and rescue him. But it's such an amazing, it's so powerful when you find people that have the same vision and a very similar mission to you, right? It is so energizing. Proxy's mission and vision. So Proxy's mission, let me summarize it, is to democratize financial services. It doesn't apply to the 1%. It doesn't have to apply to the 1% anymore. And that's why we exist. And coming together with you, Alex, and all of your posse, everybody that we met through Jacqueline, through Tanner. We met lots of the folks in Vegas in our summit earlier this year. It was so powerful to have those conversations, to share, to see the synergies and the overlapping destinies that we have, and to come together to power that. And I couldn't. CJ just sent me a text and said, let's take take a snippet of the recording and send it to our fund admin, the blockchain technology that Alex was saying. Like, this is such a perfect description. Let's get it over to our marketing team. You're doing a better job than our own marketing team in simplifying and describing it with such elegance. So thank you so much, Alex. And anything you guys need, any questions you have, we're here to help tonight.
So so Brian, how long have you been in this game, private equity game?
I've been on Wall Street for almost 20 years. And so a lot of the components of what we're talking about, I've been dealing with. So in compliance for almost 20 years, that's where I cut my teeth on Wall Street, started in compliance. And then I moved to investor relations, which has a component of public relations, but it also has a component of transparency, of communication, of elevating a message or getting across to investors what's going on, what's happening in a fund, what's happening with the stock. And again, when I got together with CJ in 2017 to start to create Proxy, that was our ethos, was can we, from my side personally, I grew up abroad. And so I know that financial services, having a personal financial advisor like we have here in the States, a kitchen table financial advisor, right, of any middle class American family has access to that. That doesn't exist in many parts of the world. I mean, actually, the United States is the exception all across the board. For a high net worth person or an ultra high net worth person, like the 0.1 percenters that Jacqueline was talking about, they have that at banks. And then the services that are sold are very, not to knock on any profession, but they're very tainted, right? So look at this. Bank ABC recommends to you, Alex, that you put all the money into ABC funds. Wow, look at that. It just so happens that this is the best fund out there. Really? And so we came to disrupt that. And again, we are super proud and excited to be riding along with you guys.
Yeah. And based on what you're seeing here, like I've been kind of pitching this idea and sharing this vision with you guys, and it's grown, it's shifted a little bit, and it's just gotten larger and larger. What do you see about, like, what do you think about this opportunity here? Like, just
yeah,
this is going.
Yeah, this is the ethos that our private equity division, it's called Proxy Capital. That's the sole mission of our division, is to that division of Proxy. There are several divisions and different products and services that we offer at Proxy, with different licenses and registrations with the SEC, with FINRA, all of that boring stuff. I can already see some people falling asleep there, but our private equity division our mission was to do exactly this, is to enable anybody that wants to move from syndication, and I think you're going to get into that, right?
Yeah.
From syndication to private equity. How do you do it? It is super complex, and there are a lot of legal and regulatory pitfalls that you will fall into. And usually there's this guy that's exploding on social media now. How do you do your fund? And click here, go make your own fund, and that kind of stuff.
Bridger.
And yes, correct. Pennington.
Bridger Pennington, yeah.
Pennington. And his journey was, I learned through the School of Hard Knocks, right? Where a consultancy, right? So a consultant like Proxy exists to help avoid those pitfalls and to be able to navigate this. And again, why does a Blackstone charge millions of dollars to make something like this, and they have a minimum of $1 billion? Because it's self-suiting. They don't want to dabble with, zero AUM funds that are started popping up here and there. They just want to reap big fees and play at the top. And democratization is not their game. Yeah. And so we looked at it 6 years ago, We said, okay, can we do this? Are we able to? Sometimes the legal costs, sometimes just impossible, right? But as we were moving through our own discovery journey, I was like, wow, it's not only possible, right? It's accessible, and we don't have to charge a consulting fee of $500,000 to get started. So let's go with things that make sense, and let's put this in the hand and make it a tool and put it in the hands of people that are going to do good.
Yeah. So, I mean, the idea and the structure, yes, it is about democratizing private equity and giving power kind of over to the people and giving everyone another option, right? It's not like, here, this is the only place we can put it. If you think about where BlackRock gets all their money and Vanguard and stuff gets their money, 95% of your 401ks are placed in there. Your 401k managers puts it right into something that is along the lines of Vanguard, BlackRock, Fidelity, State Street. Like that's just where they put it. It's just those four places, right? And then you have teachers' pension, the police union, like all the money just going over there. And they can, because they have the best. This is where they play, though. They play right here. They can push builders, right, to take a smaller fee because they come in cash. They got a lot of money. But now we also got a lot of money and we also got a lot of cash, but we also have debt that they can't get. And they don't do building. They don't go and build. So we're going to cut them out of that phase. And this is where we start, phase one. This is where our funds are not going in to buy where everyone else is buying right now. So you got BlackRock over here, and then you have most people, everyone else over here. This is why everyone's like, oh man, it's hard to find the deal that works. Yeah, it's hard to find the deal works because this thing's already 50% to 100% higher than what the cost of build was. Okay, that's how everyone else got to make money in between. But we're cutting all of that out because we already got it. And we're just going to use Legends funds and give everybody the ability to come and play here. This is going to change the world, guys. All right. I'm like, what we're doing here, there's a very, very clear path. If we can grow this thing and give this opportunity, and we can literally change the world. All right. Sure. Right here, there's going to be 100 real estate funds, and these funds will just grow bigger and bigger and bigger. Okay, the really fast and easy way to get to $10 billion is 10,000 people raising $1 million each. That is not that far-fetched at all. Okay, and what we have right now also, just to kind of get into where we're at, is we have a very, very unique opportunity of where we start also. So one, we have a unique opportunity with our funds and the capital. Two, what we're starting with, the project itself that is going to put us on the map forever. Okay. Downtown Las Vegas, Fremont. Tony Hsieh, for those of you guys that don't know who he is, read the book, Delivering Happiness. You will find out who he is and what his movement was and what he wanted to create in the world. In 2012, he bought $350 to $500 million worth of real estate in Fremont. Basically owns everything over there. City blocks, hotels, every city block, every parking lot, every multifamily, all belongs to their estate. Sadly, he passed away in 2020, and all of this stuff is just sitting there. We have the opportunity to come in and buy all of it. Right now, it's valued somewhere between $750 to $1.3 billion. And it just so happens that they don't care about selling and making the most out of it. What they care about is somebody with vision that is community focused and has similar vision to Tony, which I believe that is our community. Our community and Kurt's community coming together, like we are the ones to carry on this legacy. This is about legacy. All right, so we get to do this project. Where else do you have an opportunity to buy an entire downtown and redesign it, reshape it, and build it? This will be a once in a lifetime thing. Nowhere else will this happen. Vegas, this will not happen in Vegas again. Okay, nowhere is there just, here you go, here's an entire downtown. Where can you even go? Hold on one second. Your phone is by the pillow. Nowhere can you do that. It's in there. So, you know, that's what we get to do. You get downtown of of one of the most popular cities in the entire world. Vegas is on the verge of transforming with or without this downtown. You have an expansion NBA team. You got Formula One coming in. They just approved the Bright Line from, like, it was yesterday. They just got a $3.4 billion grant from federal grant. You know, Biden's actually going to be here on Friday to announce it, that the Bright Line from Vegas to LA is going to open. There's already 100 people moving into Las Vegas from LA every single day. What is going to happen when this Bright Line is connected, right? This whole joint, it's changing. You have industries, entire brand new industries coming to Vegas, and we get to paint and redesign the entire downtown. That's an incredible opportunity. So like I said, $1.3 billion in real estate that we can buy. It's going to cost at least 10 times that to develop. So one of the biggest problems with funds, okay, is not the raising of the capital, is where to deploy the capital. One, we have our own machine, right, of developing, building, and then selling it back to our fund. That is one. Two, we're going to be able to purchase purchase real estate deals up front with cash. Okay, that is going to get us the deepest and the biggest discounts. All right. And for some of you guys that are seasoned and understand what's going on in the real estate market, it is a very, very attractive time, because in the next 12 to 18 months, you're going to have 1.3 trillion or maybe even more dollars of commercial real estate maturing. And what that means is their loan is coming due. They once had a loan at 3% or 4%. Now it's going to go to 7%. That means a lot of equity in their deal is going to be gone. Either they're going to have to give it back to the bank, or they're going to have to sell it at a big discount. Either way, if you have cash, you're going to be winning. Cash is going to be king once again. This is why all the big funds are sitting on the sideline. And the opportunity is, we do have large capital that is going to be able to do this, but we also want everyone else to be involved. This opportunity, this market right now, when it turns, it's going to be the largest transfer of wealth. And I hope that it doesn't just transfer with BlackRock and those big funds. They don't need to get any fatter. Okay. People get to participate in this. And by yourself, you cannot do it. You won't even touch the pie itself. You might get a chance to play with some crumbs. But if we come together, we're going to be able to really, really play in that realm. Okay. Because with or without this fund to fund model, we're going there. Okay. Do we have to have this fund to fund? No, not really. But the more people involved, the better. Because it's also about influence. It's also about doing something together, making a big impact. Like, if we wanted to make a difference, I think 10 million people together, you know, a part of this, which is a money creation thing, is going to be able to make a difference. Okay. Wherever. Laws, what we demand of large companies, you know, and what influence we have over, you know, the controlling companies now. And we get to all do it together. That is the journey. But, you know, we'll nail this first, and then we'll scale. So here, this is our opportunity right now. It's fund number one, $200 million.
Alex.
Yes.
This is Kurt. I just wanted to say something real quick for those of you that might feel that that level of influence is far-fetched. It is the current model. So it absolutely can be recreated again.
Yeah. So this is happening, guys. All right. And this is where you guys get to be. You guys get to be here. Okay. And there is, you know, what I always, part of our model and our core principle is that there's an opportunity for people to grow as well. Consider this like a business. You're opening up a business. And how does it work? I'm going to explain a little bit more about how you get to make money in this whole vision. Okay. But where do you think our CEOs, CFOs, CIOs of these funds will come from? We will invite the people that understand our vision and are a part of it. Okay, this is where you begin. You can start right here. You skip the line. You go from when you go from residential to multifamily, when you go from single family to multifamily, okay, large multifamily, I'm talking about 3 or 4 units. You don't go back to single families. Okay, you might start doing syndications. Okay, then you do larger deals. Great. But when you go from syndications to funds, you don't go back to syndications. Skip it. Save the time. And what you're going to learn being a part of this will be life changing. Okay. Let alone what you're going to, what you're going to be getting from, the returns and stuff like that, how you're going to make money. Consider a business that you're starting. All right. Okay. So that is the vision. Now we're going to go into more of the technical of what is included, what does it look like, and then we're going to take questions. Okay, so here is what your fund of funds will look like. You will basically have very, very similar investment thesis. That is, from our main fund, we're going to say this is our investment thesis. Your fund to fund being created by our same attorneys is going to help you create this inside your PPM, which is a private placement memorandum. Everyone gets to have one of these. Okay, these are pain in the butt stuff that if you go out and do this on your own. See, Bridger Pennington out there is teaching you how to do this, and he'll teach you what you need to put in here and all the concepts and all of that. But then you're off to do it on your own. Okay, and you still need to find a place to place it. And what people end up doing is taking fund of funds and invest into syndications. That model itself will just implode on itself at some point. I promise you. Because people still don't know how to decipher a good deal from a bad deal. All right, you will have admin stuff. Okay, admin stuff from Proxy that helps you onboard your investors. Okay, because this is also a pain. Just to learn this thing, this is like if you've done syndications, like onboarding is a pain in the butt. Okay, that means and they got to all be accredited investors. Okay, I can't spell, so don't just leave me alone on that. For those of you guys that are like, no, that's not how you spell it. Onboarding your K1, which is your taxes for your investors, right? This is also kind of like done for you. Brian, if I'm missing anything, just let me know. Also, your distributions. This is also done for you through the admin work from Proxy. Okay, obviously on this side, you're going to also be working with a CPA here. What else? There's distributions, admin. There is, like any reporting.
Yep.
Yes.
Yeah,
reporting.
like each new state, you have a filing.
Yes. Reporting. This is like filings with the state and all of that.
SEC, state. Yep.
Yeah. So SEC, state. Okay. All of that. What else? From the admin side. Basically, you got a babysitter. Okay.
We'll review marketing and disclosures and disclaimers, yada yada.
Okay. Yes. Marketing, disclaimers. Like, if not done inside with us, this is all stuff you got to figure out on your own. All right. This is all like it's painful to learn when you don't know what you're doing. That's why most people don't step into it. But now we're making it real easy for you. All right. And you have the best place to place your money. What else? What else? So you also will have like weekly calls for learning. All right. The other thing that you get is I think for you guys, so this is a $5,000 thing that Proxy is extending to everybody for an extra $1,500. You get your financial fitness. And what that is you get this is your retirement, like, what is it? Assessment, advisement.
Financial fitness.
Right. So that's retirement. This is tax strategies. This is all strategies.
Succession.
Oh, succession. This is huge. Okay. The reason why Tony Hsieh has a huge problem is because he passed away and didn't have a succession plan. Right. So think about all this that you're gonna get just for yourself too, like succession planning. Who's done that? I know I really need to go through this financial fitness too. This is your foundations. If your foundations are solid, think about this entire community, 1 million people having solid foundations, like what this whole thing will look like. When people have solid foundations, they are less likely to compromise themselves and commit any sort of fraud or anything out of integrity. Okay, I think this is extremely important. Proxy is also going to extend this to the investors. Okay, very, very generous thing that they're doing. What we're also going to be doing is we're going to have quarterly live events. And this is for fund of fund managers only. Okay, so there's going to be that. And then there will also be one for your investors too to join. But there will be something like that for it's going to be super dope. All right. What else? Where am I? So investment thesis. Oops. What? Oh, my bad. And weekly calls. Did I put weekly calls? Yeah, this weekly calls. There's going to be capital raising, pitch, legal, security compliance. All that stuff is going to be included in here. And you're going to learn what you're going to learn from participating is going to be different from anywhere else where you can learn concepts of things. Every conference, every course, everywhere you go, you are going to learn concepts. Okay, this is like, here's how you participate. This is how you're going to be involved. And the learning here is going to be, it's going to be day and night compared to what has been offered up to this point. So last week I had shared that this is a $50,000 entry. Okay. Just the fund to fund setup from legal side is like $20,000. Okay. So there's a lot. If you were to go through it on your own. Okay. One sec.
Alex, can you scroll down just a second more so I can take a shot there?
You can take a shot. Like go up or down? Like this? I'm going to send this recording to everybody. So if you
no, that's perfect. I got it. Thank you.
Cool.
What
All
is
right, so
F at the bottom?
What?
Or at F like
fund of funds.
Oh, fund of funds. Right.
Fund of funds.
Oh.
Okay, so a syndication typically looks like this. Is that how you spell syndication? No, it's not. Syndication versus a fund. All right, typically what happens here, syndication is a fund, okay? Technically, it's a single asset fund. You get a deal under contract. Okay, hopefully they give it to you because you can't show proof of funds. You're only showing track record. Then you begin your, this is your due diligence. Okay, due diligence is inspections, appraisals, legal, accounting. You have your like due diligence with like leasing and things like that. All of this will cost you probably 50K plus. That's one syndication that you're going to get into. Okay. It's already going to cost you that. The cool thing is because of all of this, right? All of these are kind of your fixed expense. When you raise the capital for the deal, because what you do is you do all of that, and then you also got to raise the capital, and then you got to manage the deal, and you have to sign on to the loan. Okay, all of those things. You got to do all of that, right? In a fund, okay, in a fund in our fund-to-fund model, you will basically, yes, 50K setup, okay, which in this scenario is pretty much the same as this, okay, all of this here. So we're going to say like when you reach $1 million, raise this 50K back out. Okay, so starting this fund, it's going to cost around 50K. When you reach $1 million raised, you will get that. The way that you will make money, okay, usually in the fund, the capital is already there first. Okay, so the money is already there, and then you go and purchase. This gives you the greatest leverage when you're negotiating with somebody on a deal. Okay, I got a $10 million property. If you come to me telling me that you're going to syndicate it, you will be at the bottom of the list of being awarded on the deal. If you come and you tell me you got a 1031 exchange, okay, you move up. If you tell me you have a fund and you're going to close in 15, 20 days, you're at the very top. Certainty as a seller. If I'm selling anything, certainty of close and timing of close is the most important thing. It's not the price. I will come down $1 million, $2 million, $3 million for the certainty of close. Syndications is like a 50-50 shot for a seller. Probably worse than that right now in what we're seeing in the market. Okay. So a seller is going to say, here you go. You got a fund. I'm going to give you $3 million off. The bigger the deal, the bigger discount you're going to get. Okay. It's either that or they're going to send this thing back to the bank. All right. So just understand that a fund gives you buying power and gives you the power, the position of power when you're negotiating. Syndications, most of the times you're negotiating from a position of weakness. Either way, somewhere around 50K you'll spend. Bigger the deal, more expensive. All right. This is just a probably typical small $10 million deal. You'll spend 50K just on getting that going as a GP. The fund of funds, okay, this fund of funds, you raise this 50K once, you can basically be investing into multiple deals over and over. And this is an evergreen fund. Your business is open forever. And the way that you make money on this, okay, what we're going to do, we're not going to do performance based. You will get somewhere around 3 to 5% asset management fee. Why is this thing glitching? So if you raise $1 million in your fund, okay, your 50K that you put in can be returned back to you, raised back to you. I mean, you can literally do this at 500K, but I think we should set a benchmark for ourselves and for our investors that let's get to $1 million and then we will pull our 50K back out as a fixed cost, right? So you're going to charge 3 to 5% asset management fee. You're going to charge fixed fees, which are, your yearly, CPA fees, your yearly legal fees, okay, and like marketing. So these all come before it hits your this asset management fee is only strictly related to how much money is raised in the fund itself. So $1 million, that means you will be making 30 to 50K. This is pretty passive. Okay. Like, what an out of control opportunity here. Now, you don't have to, if you're like, shit, I don't got 50K. Well, who can you come together and build a business with? This is the cheapest and the best business that you can possibly build out there. If you go look online to buy a business anywhere, it will not match what this is capable of doing. The opportunity of what this is. Okay. 100 million, because you keep going. And the amazing thing about this is as you're a part of what we're building here, you get to tell people that your fund is doing $100 million class A brand new build. Oh, and we're also building this. This is a $400 million thing that we're building. The level of conversation you can have being in this fund is worth millions of dollars. Just that itself. You can sit down with a billionaire and literally get the billionaire to invest with you. Who here has a deal that you can go to a billionaire and be like, hey, look, here's my syndication deal, right? Will you invest with me? It's, a $12 million deal and it's a, 2x in 5 years. They're like, dude, can you show me another deal that's like everyone else's? This is the opportunity to set yourself apart from everyone else in the game right now. All right. 3 to 5 mil. And your fund gets bigger and bigger. And then what you're going to be able to do is you're going to say, I like this fund that you're doing here, Alex. Let's put some in here. And then we will have another real estate fund in, I don't know, Columbus, Ohio. You know what? I want some of our money in there. See, you're making your fee. Like you're doing some work and some decision. And, you're going to have proxy behind you to help you to advise, okay, on what you should be doing. So I'm going to put some into, this deal, into this fund, and some into this fund. And you know what? I really like the debt fund. Let me go and put that into the debt fund. And then, let me go put some into the, maybe we'll do a little 2 to 5%. We will play on the business acquisition venture funds. Like, how cool is that? That's what you're going to be doing. You become truly like next level in the game of private equity. Okay. Like what Proxy said, their goal was to democratize private equity. I didn't know that's what I was doing, but I love the way they said that. So I'm like, yeah, let's democratize private equity. This is how we do it. Literally a path to it. And the more people that are on board, the more people that are invested into our deals, because all of these returns, like we could make a lot more on our builds, but we're just giving it back to the funds. That's all going to trickle up to the investors. And, the returns on these are great, are going to be great. All right. So again, this is kind of what it looks like, right? And here is the caveat too, though. Speed matters, right? To build these fund of funds takes about 3 weeks to a month, somewhere around that time. Okay. Our legal team, our securities attorneys, their law firm can handle like 15, maybe 20 at most in one time. Then you got to wait. Okay? And the longer you wait, the more you miss out on some of the calls that will start. And I want everyone to be in. I want to have everyone in. This 50K doesn't make me any money. That is not what I'm trying to do here. Okay. There are a lot of fees just to get some of the types of loans that we have to do. We got to put up like $1 million just to do that. Okay. Just to show our skin in the game, to get the type of loans that we're getting, to build that new relationship also. All right. At this point, I think I'm good to take some questions. All right. I would like figure out how to get into this game now. Actually, you know what? Let me add one more thing. So as a fund-to-fund manager, I would pick maybe 2 to 3 teammates. Number one, who can raise capital. Even if you don't know how to raise capital, we're going to teach you. Because of the type of deal that we have, like this, something that nobody else has, it's going to be easy for you guys to pitch. All right. That's going to be kind of like done for you. Hey, we make the pitch deck. Here you go. Put your name on it. Like, we make it so easy. That's the goal, is to make sure that everyone, like the risk of making mistakes is really minimized on your end. All right. So that's the goal here. Bridger has done an amazing job teaching people how to do fund of funds. We're going to help you with the legal. We're going to help you with your PPM. We're going to help you with our coaching, but you are not really investing into any deals with us, because at the top of it, they don't really have a product like we have. So basically, their product is just charging you for a mentorship. It's education. You're paying for education only. Then you got to go out there and figure out the rest of this yourself and deploying the capital. That is freaking risky. Bridger's father partnered with, his partner was Paul Hutchinson. They had a $20 billion real estate fund. And the challenge isn't about raising the capital. The challenge is about, where are you going to deploy it? So we have a machine. Nobody else has a machine like this. Everyone else can only look at deals. And if there's a period of time in which they have to deploy the capital, they might actually have to just buy anything. Okay, this one looks good. We're buying it. I don't even know if it's going to be very profitable or not. All right. Grant Cardone buying nice class asset buildings. He's got cash. He's got power when he's negotiating. He's still buying those things at like a 3 cap. Okay. You know where that comes in at when we go back up to here? This is where he's entering. Okay. GC. Also out here. Okay. Maybe he gets a couple $1 million off. Cool. He wants to be playing where BlackRock's playing. Can't even imagine playing where we're playing. All right. So that, like, I cannot stress, I don't even know how to share. When I share with people that really know the game and funds and playing big, they're like, you're only charging $50K for access to this? I'm like, yeah. Because it isn't about making the most money on people. It's about making them the most amount of money. So we have a community. We're like a legion when we go places. That's the goal. It's about what we can influence, what we can impact when this whole machine works together. All right. So we have amazing structure. We have amazing, machine, our manufacturing plant. Okay. Best debt, best deals, best, everything. And protection, risk management, from proxy. This is we're all in. All of us are all in on this. Every partner that I have is all in.
Real quick question.
Yeah.
Yeah, the funds raised $1 million. And that gives them capability in what capacity?
You invest into the fund. And the fund, yep. And the main fund itself that purchases these real estate deals.
And there's no leverage. So you guys, there's no, so $1 million just gives me the capability to get a return on my $1 million. That's correct?
Nope. So here, let me, because our fund, when the completed construction deal comes back to our fund, because we also have the best interest rate. Like I said, the debt is the best. If you guys can find debt at 5% right now, like, let me know. I don't think anybody can. All right. So that comes in, buys the building with the fund using a 5% interest only debt. Okay. That gives us the highest leverage. We already got the best price on the deal. and we're going to get the highest leverage, the lowest interest rate. Like that's going to be massive, massive returns.
Gotcha.
Yeah. That's what I'm saying. Like if you are grasping like how big this really is, if you had 5% interest debt right now to buy anything out there, you would be cash flowing and returning much greater than anything that you're looking at now at 7%, 7.5%. Yes. Now imagine you can go buy that brand new building at cost with that debt. Right? Like that is just it's insane. It's incredible. It's not an opportunity that is available out there, I promise. All right, so we'll go into Q&A. We'll do Q&A for like, as long as you guys have questions, I'm ready to answer. All right, and we're actually setting our first due date on December 10th for people to come in. We already have a handful of people that are ready to go as fund-to-fund managers. Okay, again, like I said, when you're looking for partners, if you don't have 50K, what can you bring to the table? What can you offer as value? Do you have time? Do you have energy? Do you have resources? What can you bring to the table? Find somebody that's got it. All right, come in and make this happen. Don't think like, oh my God, I don't have 50K. I'll wait till next year. I don't know what's going to happen.
How long is the term on the investment into the fund? 5-year term?
So our main fund is going to be a 10-year fund. Okay, there are, what we're going to be putting into the investment thesis and the PPM is that about 20% of that cash that we have, we will also be putting it into like a money account that just generates 6%, 5 to 6% interest.
Held in treasury.
Yeah. So if you want out before the fund closes, we'll do something like 90 cents on the dollar to buy you out like on certain years. And obviously there's going to be each year the value of money changes a little bit, so we have to do like a catch up and calculate what all that is. But that's what Proxy and all and what they do, right? So it's really what you're going to learn about all of this stuff for anybody that's like, wait, I have no idea what the question even means right now. Every year, if you put $100 million in this year, next year $100 million is actually like less than what this year's was, or the other way around. Okay, every year money becomes less valuable in certain countries.
Have you guys already filed and everything's in place with everything, or how far you got?
Our main fund is going through the second round of the PPM right now.
Okay, and
it'll be done shortly here because we're going to launch the main fund somewhere around the same time that the first 10 to 15 fund to fund is going to come. But we already have a property, that has like, because of what we're going to be able to do is like a 60-70% cash on cash. That is going to be the first property coming into the deal. And just what's coming is going to be crazy. We have over $1 billion to place. So what I'm thinking is this first fund will probably close very fast. As soon as the 200 million is raised, it will be closed. The second fund will come immediately, 500 million.
Do you know what the guidelines and string on that capital is yet? As in what the guidelines of deployment is?
Like the investment thesis?
Yep.
Yeah, so it will invest in completed assets because we're building it on the outside and then it's going to come in at cost, and it will buy multifamily, hotels, land, and storage. Those are an industrial storage. So those are the criteria and what we're investing into. This first fund will be Vegas targeted, okay, because we have this amazing opportunity for this Fremont downtown area. So we're going to come in and buy all of this stuff here.
Hey, Alex, quick
Yes.
question.
Yes. Hi.
I came from the syndication type of mindset, right? Where, you mentioned about the passive being an asset manager earning 3 to 5%. Can you explain more in terms of like how it becomes passive? Does that mean once we put in, let's say we were able to raise 1 million, we invested in that fund, do we get
your fee on a yearly is going to be 3 to 5% of that.
So is it like every year you
You're
get
good, James.
5%?
Yeah, it's yearly. So that's your yearly asset management fee that you charge, right? So much of this stuff is kind of taken care of for you. Now, of course, there's going to be some manual things that you need to do, like hit a button for your money to go from here into the main fund, right? So some of those things are like a little bit manual, but it's going to be way less than like typical syndications. You're going to need who's your investor relations, right? Sending out newsletters, do all the things, accounting, who's keeping track of that, asset managing, who's going to be managing the asset, raising the capital, finding the deal, who's putting the risk money up. Like all of that is involved in syndications, right? There's so many moving parts. And, I've done syndications, I've done a lot of it, and it's a lot of work for pretty low returns, as a general partner. You're in it to learn until you get to a point where you have lots, like a larger general partner stake, right? But most of the times, everybody is just giving percentages away for anybody that can raise some capital, because everybody's short on capital, right? Everyone's trying to figure out where capital's at. And
do you make money when the deal closes, or you make money after a year of deals been going as an asset manager?
So when your fund, basically when your fund starts and when the money comes in, right? So you'll make, and proxy will kind of talk more about that. Brian and CJ, if you guys are here, maybe you guys can chime in.
Yeah. So when you collect the fees, is that correct?
Yeah. When do you collect that management fee?
As an asset manager, how does that look like?
Yeah. So the manager of the fund of funds is going to charge quarterly. So the cash flow from those fees goes to the manager. Typically, it's quarterly, and within the range that Alex mentioned, 3 to 5% of the assets under management in the fund. And is it 3? Is it 5? Is it 1? Is it 10? Right? It all depends on your business model. Like Alex has been mentioning since the beginning, this is a business. And the approach to this should be from a business perspective, right? Is who am I going to, what value do I bring? Who am I going to target? What is my public audience? What are the circles of networks that I can access? What are they lacking? Based on that, you bring the domino effect backwards and in what we call like upstream, right? And then from there, then you architect a fund based for those people. And if they're demanding low fees, then you lower your fees. If it's an audience that is not that sensitive about the fees, then it all goes into the architecture. That's pretty easy after you know what variables you're playing with.
Yeah. So just to make it a little simpler, is like probably in the beginning, because you don't have a track record, you're gonna say we're gonna take a 3% fee or something like that. Right. But when your fund of funds starts producing crazy returns, you're going to go to your investor and say, well, either you become like a registered dealer broker where you can take performance fees too. You're going to say, all right, well, now I'm going to take 7%, right? Based on what the type of returns we're getting our investors. If you have a track record, you can charge whatever you want. Right. And so I would say in the beginning, stay in the range that is more on the lower side of 3 to 5. Right now, if you already personally have a lot of people trust you and you've done a lot of syndications and deals already and you have track record, you can charge 5%. Right? If I was to come in right now with my track record, I would just straight up charge 7%. Because I know the magnitude of what we got going. Like the difference in the deal that we're buying is 100 million or 170 million. 70 million savings going up to our investors is going to be nuts. So, but of course, until this track record comes, we don't really have anything to show like that. But we know where we're going.
What it allows to happen, I believe what you guys were touching on is upstream and downstream books. And after it starts, then the value flip flops like a teeter totter. Like it exchanges between the entities.
Mm-hmm.
I don't know if the guy from Proxy, that might be something he can touch on, but that's the minutia of how that works.
So, no, well, I was talking more about
what I was
upstream,
saying.
meaning you architect your fund so you have demand, right?
Mm-hmm.
You're from the marketing perspective, you can have conversations and say, I'm thinking of this to your network. I'm thinking of this idea. We have access to the Tony Hsieh
Portfolio.
portfolio, or not. I was thinking, should you use that name or not, right? But I have access to this real estate, and as that's something that Alex is going to work on the pitch, on the how to approach people. Based on that feedback, that initial feedback, then you can create your fund.
Yeah. Okay. Yeah. I don't want to get put people in the reeds of how the values translate, but yeah. Basically the fund itself, look at it as the main co-borrower. It's got whole, when you go to raise capital, it's got the value is held one place, and it's strengthening the rest of the smaller funds as you transact. So value is going back and forth, and it gets larger, and the more consistency and the more transactions you do, the more capital and credit availability is created.
Yes, exactly.
Oh, absolutely. From that perspective, yes, absolutely. And the master fund will have higher minimums, right? It's a little more inaccessible to the public.
Mm-hmm.
Or it's only institutional investors can invest in the master fund, right, Alex? And then your fund of funds is the portal for a retail investor, accredited, right? But a retail investor to be able to get in.
Mm-hmm. Yeah, and I'll tell you right now, just from what we've shared, we've got multi-$100 million people that want to invest into what we're doing. So if they at that level, they're interested in what we're doing, think about like how easy should it be to pitch this to a regular investor? But you got to like grasp that vision and what we're doing, right? And then being able to, at the end of the day, you will be pitching your people. I'm not going to do it for you. We will create like outlines, templates, things like that for you, and what it all looks like, and we will be educating on a weekly basis. So this education thing will start probably second week after the 10th. So there will be one beginning before the year ends, and then we move into 2024 on a weekly. All right, Catherine, hey, what's up?
Hi, good evening, all. I just wanted to ask a communication and transparency question.
Mm-hmm.
I'm not sure if you addressed this earlier. I did jump in a little bit later. So my question is, how often would you communicate with your investors? And also, what type of report will you be providing to your investors?
Yeah. So Proxy Financial is actually going to help handle a lot of the reporting. So because everything is going to be put on this trust ledger, this blockchain that we have is a proprietary software where every transaction, every document, everything is tracked and kept. So all the reporting will go through there, and it can't be changed, right? Like we can't just change numbers, inside that platform. So the transparency itself from investors all the way down to the main fund is going to be like clear. Okay, so that's one. Two, the reporting, definitely at least on a monthly basis, the reports will come out, and basically you guys as fund to fund managers will get the report, and you will just kind of stick your own logo and stuff like that on there. Right. And then you just send it out to your investors. Like that at least is still something that you guys get to do, and Proxy will be monitoring and helping you guys do everything along the way. All right, which is cool.
Yeah, and I wanted to ask, what type of program are you planning on using? Because, when in doubt, for whatever reason, whenever the internet fails us, it's always a great day when internet doesn't fail. And do you have a backup plan if there is, a day that maybe the website isn't working, or do you have an IT team already in mind to start that process just in case if there was anything to
Sure.
happen?
Sure, absolutely. I could speak to that, Alex. So we use blockchain technology, and we do have, from a regulatory standpoint, we can only enter this when we have a disaster recovery plan. So that's where the experience and all the regulation and all of the red tape that Proxy has gone through over the years to operate to be an investment advisor, SEC registered. We also have state registrations. We couldn't even be doing this if we were just coming on board as a software provider or a SaaS or just as a service provider. But we have all of that as part of our regulatory order, and it's something that as folks come on board, right, Alex, we could sit down and have a very deep. We can get into the weeds. I don't think it's the time and the place for today, but it's a great question. But just know that we do have disaster recovery plans. We do have business continuity plans. We have all of that in place right now, and technology failing us. As I understand, there's multiple layers of servers for the blockchain technology. It is immutable going backwards, infallible going backwards, but nothing that we can't produce via printing and mailing reporting. And even it's something that is not available exactly today, but we can put it into the pipeline of developments as if an investor checks a box and says, I want a paper statement sent to me on a quarterly schedule, is another one of your questions. Usually these things are quarterly or twice a year. We can have it mailed to them too.
Right. Okay. I don't know if people are actually, is that like an extra fee service? I feel like that just ends up making work 10 times more.
Yeah, it will be.
Okay. All right. So yeah, great question. But first of all, we have a third party, Proxy Financial's third party, right? So this is not done like in-house. Like you have a lot of things done in-house and it's a mess, right? We have a professional third party team that comes in and handles this. And, that's when you're raising large capital and when you start talking to family offices and, dealing with tens of millions of dollars, they're going to want you to have third party, administration. They're going to want you to have third party audits and CPA firms. Like you don't do any of this stuff in-house. All right. Like the more you do
Yes,
in-house, the more they
that's
don't
why.
trust you.
Yeah, that's why I asked, because in my experience with my friends and notable people that in this community space, they have these kind of layers, and I'm really glad that I'm sorry, I forgot his name. He was speaking
Brian.
just now, the gentleman.
Yeah,
Yes,
Brian.
he said that he has multiple, and that's what I wanted to make sure was like there was like that connection, that there's multiple just in case and all of that, because I have heard from other people that sometimes when technology does fail, it's the worst, and when it doesn't, it's the best. So I just wanted to make sure all of that was mentioned, and he did mention that. So thank you so much for your time.
Yeah, thank you for your question. Wow. Good to see you here.
Thank you. You too. I'll see you later. Thank you guys.
Yes. All right, Anastasia, go ahead. Go ahead, my friend.
Hello, everybody. So my question is, if you choose to create a fund to funds, and let's say you partner up with someone here in this community for this fund to funds, and I heard you say picking three teammates, right? Is it like you divide that 50K between the three of you, like you invest a portion of that 50K to create the full 50K for that fund of funds? Or yes?
Yeah, I don't know how you guys want to split that up, but as long as you guys come in as one entity, right? So one LLC, and you guys, pay the 50K, we get your paperwork and everything started. right? Because we want to get that fund to fund like started now. We want to get the paperwork going because it's going to take 3 weeks plus. So, yeah.
Okay. And then my other question is like, let's say you're somebody who does not have the funds, but you have the time to put in the sweat equity. I guess what does that look like in terms of like your return in sweat equity? I don't know.
It's going to be up.
Money. Do you still get something out of it in terms of invest? I don't know.
Sorry, Alex. I was just going to comment, but go ahead.
Hey, Kurt, go ahead.
Yeah.
Oh,
yeah. So then what's going to have to happen if you don't have the cash is you're going to need to find some partners. Let's say your 2 other potential partners, and they're going to have to be willing to put it up. And then you're going to have to negotiate with them for them to feel like the work that you're doing is going to be worth some shares in your part of the fund of funds. One other thing I'd like to mention to everybody here, whether it's real estate, whether it's a business acquisition, or whether it's a new venture you're founding like a startup, there's this thing called founder risk. Founder risk. I'll just give you an example of how this works in the rock and roll world. Let's say you're top of the world, you're a platinum artist, and the band decides to break up. You're in a lot of trouble. So what I'm saying here is founder risk. One of the things that it means is that you can have a break between the founders and they don't agree, or when someone decides to move on, or one of them goes off the deep end and does something crazy, and it creates a bunch of problems. So partnership business is a team sport for sure, but be very, very, very careful whom you choose to partner with, especially when we're talking about money, because money tends to be a magnifier. So just be real mindful there when you're choosing your running mates, that they're going to put in the work, and make sure that they're working alongside you to fundraise and to communicate and all that. So just some thoughts there, because it's a marriage in and of itself. And think of this as a franchise that can create a humongous return. And if you've got little problems in the beginning, they can turn into really big problems once there's a lot of money at stake, because this is an amazing opportunity, obviously.
Yeah. I mean, we're going to be looking at like hundreds of millions of dollars being involved in what we're doing. Okay. Just that itself, to be able to participate there, your mind is going to expand. The expansion of your mind is going to be worth, like, it's invaluable. Okay.
Next question about that part. So if you are the person doing the work, not putting in the funds in the beginning, what does that look like? Is it, I know part of it that I heard was raising capital. Another part is, what are you looking at, deals and then bringing it up to you? Like, what exactly does it entail?
So very small part of it is going to be you underwriting or looking at deals. You can feel free to do that. It'll mostly be in the, some investor relation stuff, maybe helping with a little admin stuff here and there, and is the raising of the capital, right? Like, what do you, because some people may not have the time. Like, you may just have to be the mediator, the in between proxy doing the onboarding for you versus like your investors, like just setting the time up, setting the things up, like you be the one that does that. You can do all that. Right. But what I would say is, like, you're giving somebody an opportunity to put money to be in a partnership with you. This is why I'm putting this out for our community first, and people of our community, right? Every single one of you that are here has either been invited by me directly or by somebody that is been invited by me. Okay. Every single person that is here. This has not gone out to like the masses yet, and it will. I just didn't want to do that yet, because when we put this out and we start advertising this on social media, on Google and on Facebook, like, this thing is going to blow up so fast that when you want to get in, there's going to be a long wait time of when you can even get your paperwork going. All right. So
one more, sorry, really quick. And
okay,
another thing, I heard you mention something about once $1 million's been raised, each time $1 million's been raised, you get
not each time. So your initial 50 that you've spent to get this going, right? It's like the legal fees and the, the ability to be involved in this. Like, that is a fixed fee that you can technically raise out whenever you want. Okay. It could be the first 50,000, but I advise that we don't do that, that you raise it out when you hit $1 million. Okay, because if
So
you
like
raise 100,
100.
if you raise 100K and you
Mhm.
pull out 50, right now you're putting 50 into a fund that is, it's not gonna look that well, and it's not gonna be such a great return. So I would
You're
have a target for yourself.
basically-
The first target should be $1 million. Once you
Mhm.
hit that target, then you can deploy that money into our fund, our master fund, and then you're going to start generating returns, and you can pull 50 out of that just to get everybody paid back, right? So whoever put the money in there, that's what you call your initial, in syndication world, you call that the risk capital, right? That could be raised back out. All right, so thank you for that. And we'll send out an email for people to be able to set up. I gotta see if I'm gonna be giving out one-on-one calls. If you're truly serious, then set up the one-on-one with me. Don't like just come with a bunch of questions, right? Like if you're really like serious and ready to go, I'm going to be sending out an email that has my direct one-on-one calendar set up. Okay, a call. All right, Carolyn, go ahead.
Thank you. So we can have the management team, it can be more than one person. Can it be 2, 3, or 4 people?
Yeah, have 10 if you want, but I wouldn't suggest it. I would say like 3 people, 4 people max.
2 or 3 people, okay.
Yeah.
And Anastasia answered some of my questions. And then will there be, I guess we would set up an LLC. Can there be, there must be a way to do a beneficiary or a transfer on death or something if that happens.
We will take care of all the legal for you, including your LLC, all that stuff. Okay.
Okay.
Yeah.
And
So go ahead.
I have to be, if we have to be in the second round, that's going to happen after you get
It'll
to
be in 2024. It won't be this year.
right. Oh yeah, definitely. But
yeah.
After you have 200 million. Okay.
No. So it's not after 200 million. It's just, you'll just wait in queue for the next opportunity that our securities attorney has the capacity to do your filings, because it's a lot of work. You go through this setting up a fund, you're going through the PPMs, you're going through all this stuff, then they got to file it with the state, file it with the security, the SEC, and so there's a lot of work that happens through that.
Okay, I have one more question. The team, I have a partner in life. He has not been on these calls, but I've been trying to keep him posted. So our team can include somebody who's not part of Legends or has not been.
Sure, of course. This is this is going out to the world now. Like, we've been doing Legends Mastermind, Legends community for a while, and this is going out to the world. We've got something that is literally going to be world changing. So
this is great.
It's time for us to shine.
Very exciting.
Yes, it is. Elise, hey, thank you for being so patient, everybody.
Hey, Alex, thank you so much for explaining it again. From last week and this week, it's getting more clear to me now. But yeah, my question is, so we're creating the fund of fund. Now, how many assets are in this fund and per fund? And also, because since you said that the asset is going to be there already, all we're doing is to bring in investors, right? So my question is then, which asset goes to which fund of fund? Like,
So
I'm just
like
not
our main, let's
understanding.
say fund number 1 buys like 7 assets, right? It's all together. It's not like a fund to fund picks an asset inside the fund. You're investing in the fund itself. So your risk is split, right? You've diversified inside the fund in different assets. You know what I mean?
Oh, okay.
So now you can diversify even more by saying, some of my money, let's say you raised $3 million, we're going to put $1 million into fund 1, which is doing, the initial plays of the Tony Hsieh deals, which still great returns. And you know what? I want to put $1 million into the debt fund for, the cash plays, right? Because it's going to be 10, 11, 12% returns on your cash. Now, I want to put a little bit in there and then, something else in fund number 2, which is now more focused on the new builds and things like that.
Okay, so there will be tons of asset there for us to choose which one we want to.
There will be different funds, but not the assets itself, because the assets itself, we're just buying and building and buying and building and doing all that.
Okay.
Yeah.
Okay, and
so remember one thing. Let's
Mhm.
say we're built like for the Tony Hsieh build over there, right? So that asset, the first funds, as you're buying those properties, they're going to be appreciating even more when the second fund is buying other properties, right? Like as that area is building, the first becomes more valuable.
Mhm.
And then as more things get built, like because it's got some appreciation of time, and now the value of this area has gone skyrocketing because of what we're building. Right. So the first fund is actually going to become very, very valuable. That's why we finished a syndication of a 30-unit deal there, like this past a couple weeks ago. That deal itself is going to benefit massively from all the things we're going to be buying and building over there. Right. This is why I said we have a unicorn debt, unicorn opportunity. Everything is unicorn about what we're doing, including the deals that we're going to have now. Right? Like, where do we get to build an entire freaking downtown? That is ridiculous. So,
okay, so my other question is, you said that so whoever we bring in, our investor, has to be accredited.
yes.
Well, my question is, if you want to impact the, mass people, I'm just wondering why won't we take also 506B as well?
Because
The
you can't. A fund of funds can only take accredited. But what we're doing is we're allowing non-accredited to actually be fund of fund managers.
Okay.
Right? Like, like you get to people that are accredited and more sophisticated and that have a lot of money. They're not looking to run any funds. They just want to put their money somewhere and just make me a return. Now, non-accredited, you get to hustle. You get the hustle and you get to get your butt up to being accredited and being, the top. There's 2 more levels above accredited. Okay. So in case you guys don't know that, there's 2 more levels above accredited. So, you want to get yourself there. And those, if you're not accredited, this is your time, right? You're getting training wheels, you're getting everything built for you and done for you, and you're playing at the top level of private equity. Like this is you're skipping wholesaling, single families. I mean, those are all great ways. Anything in real estate is probably great. Syndications, it's great in its own right. But once you move to funds, you don't go back to syndications. Okay. Once you start playing at this level, you're not going back to a $5 million deal, $7 million deal. Yes, qualified. After accredited is qualified. Okay. Then
yeah. I do like the fact that the education is provided, that you will train.
I am a mentor, coach, teacher at heart, always.
As a capital raiser, that I like, and the pitch deck, everything is provided. That's awesome. So, okay, thank you so much.
Can I add on this, Alex?
Yeah.
Elise, if you want to do a Reg CF, a crowdfunding, we can do that for an extra fee, a proxy. That crowdfunding would allow you to get any amount of money from any amount of people, and then you could feed that into your 506C. So we can take that offline if it's something of value or something you're really passionate about.
Just know that's going to come at a much larger yearly cost, of filings and things like that. And now this is going to become very expensive. That's why people don't really do it. Right. And I want to steer everyone in the right direction. Okay. Like just keep it simple to start. Okay. And, as you become more of a sophisticated fund manager, you can do all types of things. You're going to be able to do an 80-20 split. You're going to do a 70-30 split, things like that. Okay. That's possible down the road, but I don't want to do that as the beginning things. Okay, especially if you're like coming newer into the game, like trust that this is going to be the best approach. Okay, so thanks, Elise. Daniel, and let's keep the questions to like, you know, like more laser and I know there's a lot, but I'm gonna answer all of them. I'm sitting here until we answer all the questions. Go ahead.
Thanks,
Daniel.
Alex. Hey, everybody. This sounds like a really, really exciting opportunity. Very cool what you guys have been able to put together. Appreciate you bringing it up to the public. I just want to confirm my understanding. So I'm not an accredited investor. So basically, how I can participate is I can become a fund manager, and if I can find investors that are accredited, I can make management fees on my fund.
Yes.
And we're buying assets that are worth hundreds of millions of dollars for an amazing price. And so, you know, it's a very attractive opportunity for investors. Is that right?
Yes.
Awesome. Okay.
Yeah. And the debt that we are going, our fund is going to be buying things with debt that is unmatched by the market. Okay, like it's way under. So
yeah,
that in itself, just think about if anybody is doing deals out there, the difference between paying 5% interest versus 7 is insanely, it's huge when you're talking about 10, 20, 30, 50, $100 million.
So something else I wanted to mention, Alex, too, for all of you guys, the way that real estate works and the way that most large transactions happen is there's a private market where the deal gets done first, almost always. By the time it hits the retail market, most of it's been picked over by people that are known to be known buyers. So in the commercial real estate game, it's basically said like, you know, the game is won, you know, before it's even, you know, really began, because really that deal that's out there isn't ever going to really hit retail. And so there's a lot of these deals, the vast majority of them, a layperson or somebody that's newer or that doesn't really come with 10, 20, 30 years of real estate experience is never going to be offered the commercial deal in the first place. And that's super important to understand that as well. So it's one thing to be able to buy it at a really aggressive thing, but even getting the deal in the first place as well, the access to the deal is something that not everybody has. I mean, the reason why our crew has the relationships we do in Vegas is because we're on the ground. We know these city blocks. We spent the time in market to have the relationships.
Yeah. And without these funds up front that we have access to, the 500 million line of credit right away, and then also our 100% loan to value, loan to cost construction loan, like that is, nobody has that. Okay. Nobody has that. So because we have that, even if we didn't have the deals in Vegas, we would still be playing and buying deals and building deals at the highest of levels. Okay, the things that we don't even see on the market. Okay, things that don't go to the retail investors, like Kurt was saying. That's that like phase 3 where everyone is looking at deals. If you guys are looking at deals and buying deals, you are looking at phase 3. You're looking at it when it's already been, you know, when BlackRock has already pushed it aside, when the guys that can do those big deals have already thrown it aside, and that's what you're looking at. Okay, and we're looking at even before what BlackRock gets to look at. Like that is, think about that opportunity. That just that itself, having access to being a part of that is seriously like invaluable. Okay. Who was just asking questions before? Sorry, I want to make sure everyone. Daniel, did you have anything else?
No, that I mean, I know we met at Grant Cardone's event, Alex, and that was my first real estate event for investors, and I was just learning. And so, I mean, the fact that this is, very early stage, the first stage versus the stage that they invest at, I can only imagine. I mean, the opportunity, and it almost makes me think like going to the conference again and then getting investors there, or heck, talking to Grant about it, right? I mean, wouldn't it be interesting for somebody like him to come into something like this? Obviously,
I mean, we might sell a deal to him at some point. You know, we might build it, give it to our fund that's going to rock with it for a while, and then we'll sell it to him.
Yeah.
Right. That may happen, and he's going to be so glad to be able to get into it.
That's awesome.
Yeah. So this is how far, this is the level, the phase in which we are going to get into deals is nobody else is doing it. Okay.
It's almost ludicrous. I mean, I'm just laughing how
it's totally ludicrous.
Yeah.
Like I don't even know how else I can explain it, because it's just so ludicrous. Okay. This is not something that we can even really ask to be a part of usually. And like Proxy's motto and their mission is democratizing this is what we're doing too. The 1% of 1%ers get to play at this realm, and we're gonna go right there with them. Right. And everybody in our community gets to play. We're gonna just roll up to a party like 1,000 people deep, and then be like, who is this group? How are they so big? How are they so strong? How can they handle and do all this stuff? How do we even get involved with them? Right. That's you guys will be sitting at tables with people that are just like, nope, it's impossible. Right. Someone actually came on this call last week and was like, if you can get 5% debt, I'll give you $10 billion. I'm like, you sure? We're not even going to take it. Right. Because I'm not going to let you now try to privatize what we got going again. So, that people can't even believe it. They don't believe that this is possible, but it is. Okay, go ahead, Bridget.
Hello.
Hi.
Can you hear me? Hi,
Yeah.
how are you? I know, Alex, you always say there's no question that you can't ask or that doesn't make sense. So since I'm new to this and I've been hearing about the fund to fund. So with me coming in starting, and let's say I'm not with anyone, but I come in with 50K. What does that look like for me just coming in?
Yeah,
and what do I
we
need?
will. So I would, if I were you, just because you got the money, I would like, my perspective is always, if I can do it alone, I don't want to do it. Right. I would bring somebody else on. I would make somebody else come in with money as well and say, hey, let's do this together. You've got more experience. Maybe you will even be the one that come in with the whole 50 and bring somebody that has the network, has the resource to be able to raise the capital. And then we put you on a training wheel. Everything is basically like taken care of for you. All the things that would require a lot of expertise, we're taking care of for you. Right. So the legal stuff and the admin stuff and the onboarding, all these things, the marketing, the pitch deck, the education side of it. Right. Like if you start your own fund to fund and now you're going to start the education process, I guarantee what you're going to absorb in your head, like you'll be flying past everybody. Everyone that is kind of like in the space, learning, doing deals here and there, like you're going to fly ahead of everybody. You're going to get on a rocket ship and just launch. That's what's going to happen. Seriously.
Okay.
Yeah.
So right with the opportunity that's presented now, will the value of the entry increase in the second wave? Like,
I don't know.
I know you said if you don't know. Okay.
Yeah, I don't know. I would like it not to, but I don't know. Like, I'm not trying to make money off of people's entries. Like, that is not where money's going to be made. This is just, I want your skin in the game. And this is how much it costs to set all this stuff up for you. Like, I'm just making I'm making it like easier. If you go out and try to figure and do all this stuff out, it's going to cost you way more than $50,000. Not
Okay,
to
one last
mention
thing.
like time and stuff.
Right. One last thing. So once you invest and let's say you get the startup and it's 50K, will there be any fees charged, or that's only after you make profit, or since there's admin and everything else, will that only come into play?
No, you don't. You aren't charging performance fees. You are just charging asset management fee.
Gotcha.
Like it's based off of a percentage of money that you raise. That's it. Like if your investors start making 1,000% on their money, you're still charging the same, right? That's when you start to, wow, I got this crazy track record, I got this amazing opportunity, and you're gonna find out yourself and be like, oh shit, all right, it's time to start up a new fund. Okay, my first fund to fund was so successful. It's time for me to do a second one. I'm gonna open a second business, and at this point, I'm gonna figure out how I can charge way more. Okay, because you're gonna be like, yeah, I get to, now that I have the experience and I'm providing my investors the opportunity to make this type of returns, then you will go and charge your investors more, you know, but you got the track record to do so now. This is what Brian was talking about earlier. As you have success, and this is in all of our life, as you get more track record, you are more valuable and you can demand more for your time. So I would start here, because you don't want to be 5 years down the road and still starting here. You want to be 5 years down the road and, you know, billionaires are coming to you asking where to place their money. And billionaires, when they have a lot of money, they're not looking for 50% returns on their money. They're just looking for a solid 6% will be happy. Just give me the pref, right? And then we'll start talking about more of that stuff down the road as well. All right. So that's more like questions that when you have paid and you're in, we're going to go into that stuff. Okay. Right now, this is just want to answer high level stuff and just get you guys to commit to this, because, you know, it's the ship is sailing. It's on its way. And I want everyone to hop on. All right, go ahead, Jennifer.
I have a couple of questions. One is about the fund itself. I'm not sure if I heard right, but maybe it's like a franchise situation where
yeah, it's kind of we'll use an example. We're not calling it a franchise. Okay, this is actually not, well, I'm not even allowed to say that, but an example would be, let's say you are able to be a franchise of a Michelin 2-star. I don't know how many stars there are, but all right, Brian, thanks for being here. I appreciate you hanging around for that much time, and same with you, CJ. You guys are great. It's like having a franchise to a Michelin. I don't know how many stars is good. 1 star, 2 star. Okay, a Michelin star restaurant, and you don't even need to run the restaurant. You're just sending people over there and you just collect your fee and you have a business.
Okay, but so I guess the question is it my fund? Am I autonomous, or am I just kind of managing something that's part of your bigger thing?
No, it's yours. You're a complete separate entity. But
okay, so if I have this fund,
uh-huh,
can I invest elsewhere? Like if I saw something else I wanted to invest in, or does this fund have to invest only in?
Yeah. So what you'll kind of get into, and I think you shouldn't do this to start, because, you know, staying in the lane is what's going to give you protect you from making the, you know, least mistakes. Once you start going out of the lane and you're going into, let's say, like, you know, somebody else has a deal that you want to invest into. Yeah, sure. You can invest into another syndication, but I would be shocked if anybody can find deals like ours. You know, I would be shocked if any of that is even possible.
Well, I'm asking about the autonomy. If it's yours.
Yes, it is yours.
Does your fund have to stay at proxy?
No, well, so if you want to kind of go off into your lane, you would start to change your own. You would start to change the investment thesis, right? And then you wouldn't probably get the exact, you know, the services from the admin side, because now you're going away from what you're being advised to do.
But I guess I'm asking, is that a requirement to participate in the larger fund?
No, it's not a requirement.
And so if someone had their own fund that they got somewhere else, they already had a fund, can they invest in that larger fund?
I'm gonna say right now, no, because we want our, you know, we're giving exclusivity to the people that are coming in with us, right? Like, you have an opportunity. If you just went and created your own fund, I don't know, like, because what happens when your fund to fund starts coming into ours is we're kind of taking on liability for you too. If you go and do something that is completely like frauding your investors and we don't know, like, you're not in our system, now it opens the door up for the SEC to come and investigate everything else that is happening here. Like, we want to keep everything in sync, right? And everybody's operating the same way and being monitored and watched the same way inside our blockchain, you know, of what we're doing.
Okay, so I mean, you've talked about these other people, these big people wanting to come in on the main fund of funds, and so are they exempted from that, or
You're talking about if an investor comes in, like an institutional investor?
I don't know, you're talking about people who have, 10 million right now, whatever.
Yeah, so we would make a separate agreement with them. They're not technically going to be a fund to fund. They would just be a big check writer, and we would create an agreement that says, here, we're going to give you 12% on, pref equity on your money, or, we'll give them an option. That would just be a side contract from our main fund to them when they write over a $5 million check.
Okay.
Now, anybody smaller needs to go through one of the fund to funds.
Okay, and then two more questions. One is the fees. So you pay 50 grand and you get your thing set up and it's running. So is it a percentage, or is there a monthly fee? Is it a flat fee? What does Proxy charge to, actually, I guess, does Proxy have a portal, or are you using a different portal? But basically, how much more fees are going during the operation?
Yeah. Hey, CJ, are you able to answer that directly right now, or that was a Brian question?
Is CJ on?
I'm with you guys. Sorry.
Oh, there he
Flipping
is.
to the mute. That's a Brian question, I believe. The functionality for the blockchain is to make sure that everybody that's acting that needs to put the proper sequence for the ledger in place, that they're doing things when they need to do them on your behalf. So there's a lot of project management that goes along with it. But if you're to think about when this thing takes off and there's hundreds of people interacting, both fund to fund managers, the master fund managers, as well as the investors looking and trying to gather information, having one place where everything's automatically kind of organized in a chronological fashion will make everything a
question
lot
was
easier.
about fees.
Oh,
Yeah,
I
what
apologize.
the fees from Proxy for doing the admin fee
So
would be.
once you've done your 50 grand and you're set up and you're in operation, what are the fees? Are they like monthly? Are they based on, are they percentages, a flat fee? What kind of fees are you looking at against what I'd be looking at?
We'll be able to sit down with Brian and go through the numbers in detail. I don't want to answer to that per se, because we're still trying to kind of figure that out and where it makes the most sense. It's all about the markets that you guys are going to be entering into and making sure that you remain competitive. And this is kind of novel in that we usually a normal fund manager comes in our position and says, at $100 million, we'll charge you 4%. And that's, again, it's not democratizing it. It creates a barrier to entry that just doesn't make sense. So the goal is going to be to try to find a wiggle room in between and give as much service as we can to be able to kind of get things off their feet. And I think one thing that I can say with confidence is the admin fees come on funds that are deployed, right? So the moment you get a deposit, we don't just charge admin fees on money that's waiting. We're going to help you make money and get interest on those assets before they get deployed into the fund, but we don't start charging that monitoring fee until the funds are actually deployed, which is a little bit different than most managers.
Okay, and then I had one more question, and that has to do with being paid. And so, I've been looking at funds all year and been really excited about them, but I did not know this until tonight, that you can only charge a management fee. I mean, when you do a syndication and you're a GP, you can charge a management fee, but you can also partake in the profits. Is that not the case with a fund?
So fund of funds, yeah, at some point, yes. But the filings for that now goes into something completely different. You got to be an exemption of I forgot what it's called. There's an exemption that you can do that. But see, what ends up happening is you don't have the track record as a fund to fund manager right now to just say, I'm going to start charging performance and an asset management fee, right? So what we want to do is we want to get you in to create the maximum returns for your investors because you're new. Because you're new, there's a process in which we need to help you do it correctly, right? Do it in a way that you're going to learn and you're going to have track record, and then you're going to build a second business of fund to fund that is going to be something that you can decide what you're going to do. But you definitely can only charge I mean, you definitely can only raise from accredited investors, okay, and what we're doing. And the exemption will cost a lot more to build your fund of funds, okay, which allows you to charge a management fee. But what ends up happening is you can't have the RIA behind you anymore. Okay, so there's a couple different restrictions that when you start charging management fee, performance-based fees, it changes the structure of your fund of funds. Okay, you now become a little bit out of control.
I guess I didn't look at as I didn't realize it was considered a fee. I just thought, like, again, with a syndication, you're a general partner. It's participating in the profit, so not as a fee, but as you know.
Yeah.
So that really
so that happens
changed a
on
lot of my image of funds.
Well, on the
It's
master
disappointing.
fund, when you have a fund that is buying multiple properties, yes, there is a GP LP split, right? So there is that. But when you're a fund of funds, it's now different because you're not investing into the properties itself. Like a syndication, you're buying an asset, right? As a fund of funds, you are buying into securities. Now it's a whole different law. You're investing. So even as your fund of fund, if you invest into a syndication, you are investing into a security, not the asset itself directly, right? So as a syndication, you are buying the asset and then you have your GP, LP and all of that. But trust me, that is not like the most profitable route either. Okay, that whole split, it's performance based. Okay, so registered CFP on steroids. Thanks, Jacqueline. Yeah, so does that answer your question a little bit?
Yeah.
Yeah, right now you want to be a fund to fund manager. You're not going into the whole like performance based because you're not really doing the asset managing, the property managing. You're not doing a lot of that other work that typically in the syndication you would be doing, right? You got to find the deal, put it all together, run the deal. Like the performance of the deal is dependent on you, on your management.
Yeah, and it sounds like if I take a management fee and then I'm paying like 4% to proxy or something, that's pretty high fee. I mean, a lot to take away from the
Yeah,
thing
that
anyway,
so what CJ was saying is they're not going to be doing that. Typically, that's what you would see from somebody that comes in and does RIA type of work. But once we hit a certain threshold with our master fund, it's really going to be like 1% or even less. Okay, so that's going to come off of, it's not part of your fee. Okay, so part of your fee that you take, 3 to 5%, 3 to 4%, whatever, there is also a separate cost that is your CPA, your admin fee that comes in a second thing, right? That is different. It's a different charge than your asset management fee, your own asset management fee.
Yeah. So I guess that was one of the things, understanding what all the fees are, because maybe you come up with the 50 grand, but you don't have a lot of cushion behind it to start paying for these other things that that you find out after the fact. So it's good to know things up front.
So let me just so like let's say you raise like $1 million, right? And it goes into the deal and it starts to pay your fund. What comes in from the income for the fund, you pay for your CPA, you pay for the legal filings every year, you pay for the admin fee that comes. These are expenses. That isn't your asset management fee that you're charging your investors. Okay, so those things get paid as expenses first, and then you have your 3 to 5% asset management fee for that amount, and then they get the rest of the money. Okay, so there's really technically no performance based splits there. Okay, so we can talk that, of course, separately offline too, and we're going deep into this like 2.5 hours now, so I'm really proud of everyone's commitment, patience, and curiosity here of what we're creating, because this is something that is it's really gonna change things. So Khalil, go ahead.
Oh, hooray.
Finally, your turn. Sorry, brother.
Yes,
Thank you for your
yes,
patience.
yes. Okay, so I'm in a few different circles, and everything that you're sharing is freaking amazing. It's on point. It's very descriptive. It just takes time for some to grasp it because it took me a while to kind of go to the weeds and figure it out myself. And I've been in that other group that you mentioned, and a few other people here that invited me are in the same group, and they're doing things a little bit different because you're looking at people that are already accredited and that have that are already fully functioning in the business world and have gone through the motions, as it were. Some people mention crowdfunding as something that they're interested in. I have someone that does nonprofits that takes, works with merchants and businesses and takes them and puts it into a nonprofit, which is then profitable because a nonprofit could then set people up in their entity and then allow them to receive more funds and be structured over time when they start meeting the thresholds of earnings and different levels, as you were saying. You go from being an angel to a qualified purchaser to the hundreds of millions of dollars. We're going to source, and I love this. So I have a couple deals I've tried to bring to I don't want to mention names because I don't like casting shade, and I'm just a normal guy that just happened to fall into a couple of real estate deals that are a few hundred millions in Maui and
okay. So
like
real quick, do you have a question or are you trying to bring a deal?
Yeah, I mean, I have some deals I want to bring already, and I have connections to people that do capital raise that will help people kind of get started. But my focus is to be able to help people pay off the debt, creating a debt elimination fund that would get people started and then come on the back and take care of it because they're already part of Legends funding and a big
so if there is a separate service you want to offer to people, let's talk offline about it.
Sure.
I'm going to keep this to questions about this fund, about what we're creating here.
Right. Well, it pertains to it. So I think I'm on your calendar tomorrow. Is that okay? It was in the email, so I scheduled myself. Is that all right?
Yeah, you can schedule something, but use text with me first because I'm setting my calendar right now for people that are really just talking about the fund itself, right? Because this is going to be a lot. It's going to take up a lot. I don't want to go into looking at deals right now because I'm telling you right now, unless you have a development deal that you need funding, for on the debt side, you're not going to have a better deal than what we have. Okay. So, I mean, we can talk about it, but I'm telling you, there's just no way that anybody is looking at a deal that is already built or whatever, it's that's going to be offering anything like what we're offering. Right. So, yeah. But if you have an offer for people to help people, we can kind of talk a little bit more about that later. But this is really just, I want to focus on the fund itself.
Yeah, it's just that 50-50 raise, and I want to help people do that. I want to do it for myself as well, and I do have access to a billionaire that that he'll look at this and he'll say yes already. He just bought
I'm sure, yeah. So I mean, I want people to also, when you are bringing partners in, don't just get somebody that's got money. Okay, like Kurt mentioned earlier, partnership is super important. What you're about to get into, consider this like gold. You're not just going to bring somebody in that's got 50K. I really would highly suggest against that, right? You need to know the people that you're about to get into this game with.
We've been in communication for about a year. This is someone that is very down to earth. They teach mindset. They talk about money. He spends his time. He's very generous with his knowledge and his time, which, it's refreshing when you meet people that are very affluent and that are real people that want to serve, the community and eliminate poverty. Everything you share, really, Alex, this is my mission, man. We're really in sync in a lot of ways. And when we continue to talk, you'll see that we're in sync in a lot of ways. So I'll take that call with you. I want to help people, put money in the fund. I want to help crowdfund, use regulation CF, A+D, whatever you want to do. I'm all about it. I just wait to get in. That's it.
Cool. We'll talk about that.
Thank you.
All right. Appreciate it. Appreciate you. All right. Hey, Tanya. Hello. And Kevin.
Hi, Alex. Are there any licenses? Are there any licenses that would be detrimental to hold or advantageous to hold as we do this?
Yeah.
I have
So if you are,
I have a Series 65, so
I'm not 100% sure which one that is. You know, there's a lot of different series
it's an
that
RIA.
licenses. But if you could be if you have a broker dealer license, then maybe that might be somewhat advantageous. But really, this is, you know, with or without a license, this is for we're this is going to be for people, right? Like for anyone with or without a license. Like there's great opportunities here, and you know, with certain licenses, you may be able to you know, charge some other fees, but I would, you know, I would look into that separate. But
That's
yeah,
it.
I'm
Thanks
not
a lot.
sure if other licenses really help in this space right now.
Yeah, I'm more afraid it's gonna hurt. So as
No,
far as
it won't
compliance
hurt.
goes. Okay,
Yeah.
thank you.
Yeah, you're very welcome. Carolyn.
Am I correct in understanding that the accredited investors can be non-US citizens, but the management team, the members of the management team must be US citizens?
Oh, that's interesting. I don't know the answer to that one, so I will write that down.
And the other, yeah, I have one more question. The deadline is for the first round is December 10th. That's a Sunday. Do you need, so you need the money by Saturday? I mean, banks aren't open on.
No, I mean around that time. I'm just throwing that as a deadline for, like, you know, we're gonna take 15 to 20, right? So I put it out there as like, let's go, guys, right? And you know, we already have a handful of people that are ready to go. So I want to
Would
kind
be
of
ready.
light a fire under everyone's butt.
Commit by Sunday and then.
Yeah, commit to it. You know, let me know if you're gonna commit to it, and then because there is going to be a queue, right? I mean, once our securities attorney starts going off on these things, it's going to take time.
Right.
And you want to be in early on, you know, how to pitch this. What does it look like? Because if when you come in late, what you're going to get is, if we already talk about certain parts of the security things, it's going to go into a video vault that you got to watch, right? So then you're just going to have to watch a lot more of the replays and things like that, and then come to those calls with questions. But if people are coming to the calls with the questions that are already in the vault, and be like, hey, watch those videos first, right? And then come.
Thank you.
Yeah. Isabel.
Hi, thanks, Alex. Yeah, I need to go. I was going to leave. So can you give a scenario? I didn't want to ask this, but I mean, everybody's asking, taking time. So I'm just like, I'm going to ask because it might take time too. I know syndication. I understand syndication now. Like I mentioned the other day, you know, like now that I'm understanding now, we're changing to something else. So if I invest 50,000, I know that I will get cash flow monthly or quarterly, and I will likely double my money in 5 years. How can you like put a scenario on how the fund would be? How, you know, I don't think you are going to get cash flow, or I don't know. You get the asset management fee, which is 3 to 5% of the amount you raise. I got that. I guess you get that annually for the life of the fund, which it seems to be 10 years. Is that correct?
So your fund will be evergreen. It can go on forever. Okay. So your fund is a business that just kind of goes on forever. You can keep raising capital for it. You can deploy into different funds. But I guess I will do a really, really quick just example, like you were asking, of how you can make money. Like typically what you're looking at is hold on, it's loading.
And while this is loading, the person that brings the investor would make 3 to 5% of the asset management fee. I got that part. But how much would the investor that I bring make?
Yeah, so that's what we want to see here. So remember, when we were looking at $100 million build property, and by the end it's like 170 million, right? That's where most people are underwriting deals. Let's just say that this deal right here is what you're talking about, 2x in 5 years. Okay, let's just say that that's what it was, and you got a little bit of a discount, and you got, you know, $165 million to buy this thing, and you're actually able to do it, and you're able to do 2x in 5 years. BlackRock over here is getting it at 140 million, right? BlackRock, their returns are going to be exponentially higher. What happens when you have the same deal 2x in 5 years when you're getting it at a $70 million discount? You just use your imagination of what type of returns this is going to be for your investors. It's the same deal, it does the same thing, and you're getting a $70 million discount. Okay, this deal is going to take, I don't know, let's say $70 million to buy. Okay, you're going to have to come up with 70 million. Over here, you're going to come up with 30 million to buy. Maybe even less, because we have the best debt. Same deal, $40 million difference in down payment. It's like massively going to be different. Okay, I don't want to throw a number out there. I just want you guys to see what that looks like. Okay, think about any deal that you got that you're underwriting. Take that number, divided by like, you know, or take 45% off of it, or 40% off of it, and see what type of returns you get. You plug it into any underwriting, and you're going to be like, what? And if you showed a deal like that, do you know how many people would throw money at you? Right. So I just, that will be a very quick example. I don't want to take up too much time, but that's what it looks like. If any deal that we find, we take millions off because of the cash we have up front. See, we're no longer going to be looking at 20, $30 million deals. You're going to look at 100 million, 150, 200 million, because those level and those size of deals, you're playing with a very small pool, and you're going to get a much, much bigger discount for certainty of close. Okay. Even the syndicate, the bigger the deal, if you start syndicating, the less they will give you that deal. Syndications work. It's great for 50 million, 60 million, 70 million. Like, they'll still do those deals, but it's also very rare. Once you get to the 150, 200 million, there's nobody like syndicating that. And those returns are going to be crazy. Those are the ones that you're like, how does someone even have this building? It's like a crazy sky rise in the middle of Las Olas. Like, that's what you're looking at, and you can play and that. Yeah.
Okay.
So.
Question is, I can choose to bring the property to you, to the fund, or
You can try.
How is
you can
it?
try to bring one, but it's going to be very hard for you to, because, you know, like, how are you going to show $500 million to have somebody even take you seriously?
No,
But if you build up your fund, at some point you can. When your fund to fund is $100 million, you are going to be like taken very seriously by everybody. The only way you're going to get to 100 million is if you had unicorn deals like this, where you will have investors give you $100 million total.
So, okay, so my business, right? That's why it's called the fund of funds. It's my business. I'm investing, and I'm bringing investors to invest in your assets, in the ones that you already have. So we are not property, the deal.
Listen,
correct?
by all means, try to leverage your fund to go and get and look at other deals. If you can bring the deals that meet our criteria, of course, right? You are in our community. We will give you the time and the energy. You know, at some point, everybody is going to be bringing their deals to us. And they're going to realize, man, why am I even looking at my own deal? Let's just join yours. because that's just what it's going to look like. You can't even compare it. It's not even apples to apples. Yeah.
Gotcha. Very good. Thank you.
Yeah, you're very welcome. Somebody else had their hand up. Lewis, are you still here? I guess not. You almost made it, Lewis. Where are you? Okay, Anastasia and Fraser. Go ahead. Oh, Lewis
So
is-
sorry, I thought it was Fraser. My bad. You said Anastasia.
and then
So
we're gonna go to Lewis next because he had his hand up.
So I had a question about what the minimum investment was for bringing in a accredited investor, and then someone answered the question 50K minimum, right? I guess I wanted to put it out.
Well, it'll be up to you, but you will only be allowed to bring 100 investors into your deal.
Okay, 100 investors in the
Into a
fund.
fund to fund, max is 100 investors.
Okay.
All right, cool. Lewis, you had your hand up.
Alex, you hear me?
Yo.
Okay, so let me make it simple for everyone because this is what I do all day long. You're an asset gatherer. That's it. You're not bringing deals to you. You're not going to manage the fund. You're bringing assets to the fund of funds. That's what your job is, to create and to bring as much as you can into the fund and participate with a fee of 3%. You don't want to manage the fund. The liability is crazy because I did that for years. You don't want to do that. But for the gentleman that has the securities license, his broker dealer will never let him sell this. So that's out of the question.
Yep.
And I had a couple of more things I wanted to help you with. But basically, it's a $50,000 to get them involved in their own business. Okay, you're self-employed. You're gathering assets through connections. That's all you want to do here. Okay, you don't want to bring you deals because the deals that you have are so large, they can't bring you the right deal. They're just too small.
Yep.
That's all they have to do. Gather assets, 50,000 to get in. Okay, we just paid 75,000 to do our PPM. We just did it just to redo it. It was 75,000. I don't even know how much more we paid just to do that. So 50,000 is a bargain.
Yeah.
So I just want to let you know. I'm just trying to help you out.
Yeah. Thank you. Thank you for making it simple. That is about as simple as it gets, right? I mean, when you're talking about things like this, because we're doing it on scale, and both Proxy and MW Law are so behind what we're doing, like they're giving us a big discount for doing this in bulk. And I said, yes, I'm going to do it in bulk, and there's going to be hundreds of thousands of people coming to you doing, creating the fund of funds. So can we get a discount on this? And now I get to bring my end, but they do believe in what we're doing. It's never been done. Trust me. What we're creating has never been done.
You're getting a passive income. I used to do 1% on $100 million book that I created. You're getting 3%, 5%. That's crazy money. You'll do well over time, but it takes time to build it. It's not that easy,
Yeah. And you're going to be able to do multiple.
Yeah,
you're going to be able to do multiple. Like once you get some like I just showed you an example. That type of returns, you do that a couple times, your fund is going to fill up so fast you're going to have to open up a second one.
Right.
And because of that type of returns, you're going to have so much confidence when you pitch. Like someone's going to be like, oh yeah, 2x in 5 years. You're going to be like, okay, cool. Right. And then you're going to show what type of things you're doing. Now these are just examples. I got to go back to the disclaimer of examples. Okay. I'm just giving you examples of things that are possible, just so that you can, paint a picture in your own head. When those deals come down, we will, of course, share and show you guys what we're doing. And that's what those weekly sessions are going to be for too, right? Like the learning itself, like every single piece of what we're doing is invaluable across the board. You're going to be making 50K, like over and over the value of that. So, okay. Anything else? Fraser, did you have a question? I really, now I've run out of water like 2 hours ago. So
No, all good, man. Don't worry about it.
Okay.
I had a question, sorry.
Yeah, no, don't
Once
be
you
sorry.
start your fund to funds, how long do you have to raise your 1 million or is it $100 million?
You got all the time in the world. See, that's also the cool thing about a fund versus a syndication, right? A syndication, you got a small period of time and you're freaking out and all and that. Fund to funds, you're gonna have like at least 3 years. Okay. And fund to funds are actually like evergreen. So you can keep this thing going. You just have to do something that, you know, Proxy will handle is like the catch up of of the money, which is like, all right, last year you had this amount of money in here. What is its value versus the money that are coming in this year? You know,
And at what point do the investors that you bring in, do they start seeing any money? Or is it kind of like a
it's
retirement
always
thing, so
coming.
they're not touching it? Oh, okay.
Yeah. So what we are thinking is there will be like 3 layers of offering you can offer your investors. One, they can be 12% pref. Okay, when I say pref, that means that's the money that goes out to them first. 12%, and it could be upfront or it could be accrued. Okay, so 12% a year, that is pref equity. Then somebody can say, I'll do 6% pref and then I'll do a 60-40 split. Okay, and then it could be you know, they can choose a, you know, straight split, no pref, 80-20. Those are the people that are like, here's my money, just make the most out of it in the next 2-5 years, whatever it is. You know, so when the bigger the returns, that separation between each of the classes become bigger. Okay, so when you're at like 25% returns a year, the 12 pref is doing 12, and the second tier with the 6 and the 60-40 is doing like 17, and then the 80-20 is doing 20. But once it goes to like 60-70%, that gap starts to get really big. Okay, so people are going to just want to participate in the upside. Okay, then you have people that are just like, I want to, you know, mitigate that risk too. So let's put some into class A, some into class B, some into class C. These are things that we will go into once you are in this program. Okay, that's just like, it's a little too high level right now for me to go into on this call. All right, so wow, y'all been on this call for 2.5 hours. 41 people made it out of like, I think we started with like 77 or something. Sheesh.
More.
What's up, brother? Are you there? Did you just say something? Can't hear
Alex, good night, buddy.
All right.
It's Lewis. Say good night, all right?
Good night.
Jacqueline,
good night.
I'll see you too. Take care.
Night, Lewis.
Bye,
Love
guys.
you.
You too. Bye.
All right, everyone. So any last questions before we wrap this up? I'm going to send an email out. Oh my God, the recording of this is going to be ridiculous, but.
One more
I
question.
do have a question for you.
Right. Who was that? Okay. Anastasia.
That was Jaden.
Oh, wait. Jaden. Okay. You go ahead.
So if you're doing your raise, see if I can figure out how I want to phrase this. So I guess my question is if you're trying to make this raise, how can you market it? You know, what are your limitations, you know, compared to doing the syndications, you know, as far as, is it something where you can only market to people that are friends in your network, or
Nope.
can you publicly?
Accredited investors, you can go and put a billboard up if you want.
Right on.
Yeah. So of course, what you can say about it, we will have Proxy kind of give you guys like a what you can say, right? Because funds are typically, there are languaging that you aren't really allowed to use. You can advertise the deal and the fund and the returns, yes, but there are things that you can't say that we will also train you up on.
Are you gonna have material for us, like a basic pitch or something by the 10th, so that we can have some form of an idea of how we share this with investors?
I will try to. We will create some sort of, I'm going to simplify into like 3 to 4 pages of everything that we've talked about. You know, what we're doing here is we got to crazy, crazy machine, and we are building this airplane, okay, while it's in the air. That's what's happening. Okay. A lot of, obviously a lot of the stuff is already handled, but coming in with the fund, things like this is whoever comes in on the front end, like they say in the startup and the venture side, you never really want to be the last check writer. So it's the same thing here. There's a level of urgency that you want to get yourself aligned to. And yeah. And I have confidence that everybody that's heard about this is going to join at some point. Okay, maybe some people will be a little bit late adopters. That's totally fine. I'm getting so many texts and stuff already. Okay, Carolyn, go ahead.
One last question. When you mentioned the 12% pref or the 6% pref or the 80-20, that's decided by the investor?
They can pick. So we will, as the master fund itself, we will offer that, and then you guys can just take that and offer it to your investors.
But they will have the option of the three.
Yeah, they can diversify. They can choose a little bit in here and a little bit in here and a little bit in here if they want.
Excellent. Thank you.
Yes, we are going to have the funding instructions as soon as our LLC and bank account is set up, which is going to happen tomorrow. All right. Well, this vision is going to continue to expand, and it will expand with each one of you being a part of it. Okay. The vision, the complete vision here that is not fulfilled until every single person in the world has been touched by what we're creating. Everyone holds a piece of this vision. So I hope you guys say yes to this. Hope you guys join sooner than later. And the email will go out tomorrow with the recording, a little bit of summary of this. Let's see how good the AI does with the summary, and a calendar of setting up a one-on-one call with me. Okay, now next week will probably be very little availability because next week I will be in Florida. I'm going to be doing, I'm going to do a little vacation with my wife. And so probably we're looking at like after the 19th. All right, so okay, yeah.
Alex, you're amazing. Thank you.
Thanks. All right, everyone. Thanks for being here. Drink some water, breathe, and thank you for being here for freaking almost 3 hours. Y'all are maniacs. You guys are as crazy as me. That's what we need to change the world. All right. Have a fantastic night, everybody.
Night.
Bye.
Thank you.
Good night.
Bye.
Everybody.
Fort Lauderdale and Orlando.